This past week was brutal for me. Not because of the market, but because of the pressure outside of it. And by the end of this week's recap, you'll see exactly how dangerous that pressure can be, and how quickly it can turn good process into bad decisions. Anyone who's been trading long enough knows that what happens in your life eventually shows up in your execution. That's also the reason why there were no live streams this week. But the record still stands. Every execution, every limit order posted on X, nothing's hidden. Now, Monday. Just before the market opened, I was emotionally triggered by something personal, and I had a choice. I could sit down at the chart and try to force a win to make myself feel better, or I could step away and refuse to let the market regulate my emotion. I stepped away. That decision alone was the personal victory for me this week. Now, Tuesday, I outlined the only condition that would make me interested in trading. Price needed to retrace into this hourly order block while leaving this short-term low intact. That setup would have aligned perfectly with my bearish bias this week. But price took out this short-term swing low and the setup was invalidated. And once the setup was gone, there was no reason for me to participate this week. Price action was moving irrationally. Add to that, it was a non-farm payroll week. At that point, the logical decision was simple. Stay out. No forcing trades, no chasing movement, just patience. And honestly, had this been a normal week for me, that's exactly what I would have done. But before I break down Wednesday price action, I need to address something. I have a business investment outside of trading that's supposed to pay me once a year. That payment was supposed to come in at the end of last month, but it didn't. It's been delayed. That delay put me in a financial situation that I wasn't prepared for. And instead of staying patient, instead of staying on the sideline like I should have, I stepped into the market looking for a solution. That's the truth, and that's on me. Now, with that said, let's talk about Wednesday price action. Price retraced into this hourly order block I originally wanted on Tuesday. This is where context matters. The day before, price had already ran out this swing low here and invalidated the original setup. Technically, this was a new day and a new setup. But because of what happened down here on the previous day, the probability of this trade panning out was no longer the same. Instead of the higher probability condition I normally require, this trade is a 50-50. And there was another difference. Over the last 2 weeks, I had been consistently operating with a 3R risk to reward model. But on this trade, I aimed for the maximum profit the market could give me. That might seem like a small adjustment, but that's how pressure sneaks in. Not through obvious reckless decision, but through subtle deviation from your process. The differences are small, but that fine line is exactly what separates a profitable trader from an unprofitable one. This trade ended up as a loss. Now, Thursday. At this point, the pressure hasn't gone away, and when pressure isn't resolved, it doesn't disappear, it lingers, and it slowly starts influencing decisions in ways that are easy to justify in the moment. Price first took out these relative equal highs, then broke market structure, leaving behind this hourly fair value gap that overlapped with the new day opening gap. That would have been the perfect A+ setup, especially with sell-side liquidity building below these lows. But instead of waiting for price to retrace, I rushed into the trade using this unconfirmed order block as an entry. When price made a deep retracement into the order block, I ended up closing this trade at a 0.5R loss. Then I flip bias. This trade was totally illogical, but at that point I was already carrying 2 losses, and the anxiety from the external pressure had only increased. My mindset was no longer the same as it was at the beginning of the week. Instead of approaching the chart from a position of patience, I was approaching it from a position of necessity. The one thing I did do right was that I reduced my risk. My normal position size is 1%, but for that final illogical trade, it was taken with a 0.5% risk. Once that trade hit stop loss, I knew I needed to get away from the market. I didn't even screenshot the loss. I just needed to unplug from the market and from social media. I needed space to find a solution to my problem without relying on the market. Once the initial shock of not receiving the income I expected passed, I realized something important. The problem was solvable, not through trading, but through correct budgeting. Trading profit has to be taken completely out of the equation. I have to stop approaching the market from a position of necessity, because the moment the market becomes a solution to a financial problem, it stops being a place where you execute your plan and start becoming a place where you look for relief. Objectivity disappears, execution changes, risk tolerance shifts, and even when the setup looks familiar, the intent behind the trade is no longer the same. The real mistake wasn't the setup or the market. It was letting external pressure pull me off my process. Subtly, one small shift at a time. And that's the lesson. Because in trading, the difference between discipline and deviation is rarely dynamic. It's usually subtle. A slight different target, a slight different level of patience, and over time those small differences combine into the final result. This is also why reviewing losses matters. Most traders spend their time studying winning setups, but wins rarely teach you much. Losses do, because losses expose the subtle moments where you move away from your process. Not dramatically, but just enough to change the outcome. And if you are willing to study those moments honestly, that's where the biggest improvement will happen in your trading. So the focus now is simple: reset, recenter, and return to the process. That's enough commentary for this week review. As always, I'll keep you updated on X or in the midweek review. Next week, the focus, return to execution.